can begin. Good morning, everybody. This is Nicki Parr. I'm the Associate Director of Strategic Initiatives at Women's Economic Ventures. And I'm going to be joined this morning by Terri Fivash, who is one of our financial business recovery advisors and basically the PPP guru within WEV. So she's going to be the one that's going to be diving into some of the technical aspects. What we'll do is start with a presentation just going over the PPP, and then we will move into questions that you may specifically have and do our best to answer those on the spot. But I will say as a caveat that we may need time to go away and research, because this is an extremely confusing area of legislation that was passed very quickly, and even now there are still amendments being debated in Congress. So it is a fast-moving situation, but we'll do our best to help you. So I'm going to go ahead and just share my screen so that we can jump in to the presentation. And if you do have questions already that you know are kind of burning to be answered, please enter them in the chat box, and we will we'll allow quite a lot of time, and the bulk of the time really, to go through those questions and advise on that. So let me just start this, confirming that you can all see my screen. Terri, you want to give me a thumbs up if you can see the presentation? Yes? Yeah. Okay, good. Yeah. All right, so I should have, we'll do our best to answer all your PPP questions. Okay, so let's just go over the things that we'll cover in this presentation. So who is eligible, where and how to apply, the documents that you will need to apply. Then we'll dive into some of the more nuanced areas. So PPP versus unemployment insurance, which is kind of the more suitable depending on your type of business, and then the interface with the EIDL and how to account for if you've received an advance. Rehiring employees, which I think is going to be an interesting subject. I see Tina and Richard on the phone. I know they have some restaurants, so I think there's definitely issues and questions there. And then loan forgiveness conditions, which is kind of the new information that came out over the weekend, is the SBA released the official kind of form that will need to be completed in order to request your loan forgiveness. So reiterating that it is not automatic, you will need to request that from your lender. So, and then the questions and answer time. So let's dive in. I'm assuming that most of you on the call have received a PPP, but if you haven't and you're still wondering who can apply, basically any small business under 500 employees, a 501c3 or a 501c19, so non-profits, certain non-profits are eligible to apply, and then critically sole proprietors, independent contractors, and self-employed. You are also eligible to apply. You will need to self-certify that the current economic uncertainty makes the loan request necessary to support ongoing operations. Again, that's a self-certification that's needed. And who to apply with, so to clarify, this isn't something that you get directly from the SBA. You will need to go through a third-party lender that has been approved by the SBA. Typically the bigger banks and regional banks and certain CDFIs. WEV is not a PPP lender. We are a micro lender, but for this instance, we are not lending PPP funds. Just as an aside, we have been doing a quick response loan up to $10,000. That is technically still available, but we will probably be switching over to another kind of loan product to be more in line with kind of the recovery aspects and the restart aspects of where a lot of businesses are. So sort of watch this space for that. It will be coming in the next few weeks. So what I will say is that if you haven't applied for your PPP, if you've still been confused, you still had questions, you've been waiting, WEV is working with one of the local regional banks here in Santa Barbara County and Ventura County, and we can help you get your application into their system in an expedited way. So please reach out to me or fill in the interest form on our COVID webpage if there's something that you're still interested in applying for. And in terms of what is needed to apply, it's a standard application form that was issued by the SBA, plus supporting documents that will verify basically the average monthly salary for 2019. And that will differ slightly for the type of business that you have. So for corporations, supporting documentation will be something like a Form 940 or 941 for 2019. And if you're a new business, then they'll be looking at the first quarter of 2020 and also your W-3 annual payroll statement. You also may be requested to provide copies of payroll reports to back that up, but some of that may depend on the specifics of the lender. It's the payroll tax filings that are the key thing here. It gets a little bit more complicated for sole proprietors, contractors and self-employed. The lender is requiring you to submit your Schedule C for your 2019 IRS return. My understanding is that your return doesn't have to have been filed, but it does need to have been prepared, and this 1040 needs to have been prepared. And if you do have W-2 employees, providing a Form 940 or 941. And similarly, the lender may request supplementary information, something like a 2019 profit and loss statement, using, I'll say, accepted accounting software. What do I mean by that? Nothing on an Excel spreadsheet. It has to have been run through QuickBooks or Sage or something like that. Terri, is there anything you want to add to this in terms of documentation?
That documentation is correct. What they're looking for the sole proprietors is their net income. So they're going to find that on line 31.
Right, exactly. Okay, moving on. The PPP is intended to be used primarily for payroll costs to retain employees. That is the kind of the objective of what this kind of funding is so that you can keep your employees on payroll. So, you know, in accordance with that, if you're an individual business owner, you can't also then go and claim unemployment insurance and pandemic unemployment assistance, because that would be considered double dipping. It does start to get a bit more, again, nuanced with some employees who may have had their hours reduced significantly, and we'll talk about this below. I know that this has been an issue for people looking to rehire as well, where they've had employees coming back and saying, hey, I'm making more through claiming unemployment and PUA, and I'm not going to come back. So again, we'll address that a little bit further down. If you are a sole proprietor or independent contractor and you don't know, if it's worth you applying for a PPP or if it's worth just trying to apply for unemployment and PUA, then we're happy to speak to you about that, just to look at the specifics of what you earn. Anything else, Terri, at this point that you want to add on that?
No, that's good. That's good. Yeah.
Okay. Another thing that is relevant is if you have received an EIDL advance. So this is the economic injury disaster loan that was the first product that was available as a result of COVID through the SBA directly. That was something that you applied to the SBA directly for. They ran out of funds extremely quickly, but before that happened, they did manage to release some funds as an advance, which is not repayable. That was calculated on the basis of how many employees you had, $1,000 per employee. So if you did receive that money, you need to take that out of the forgivable portion of your PPP. Again, this is to kind of prevent the double dipping aspect of that. So Here's an example. If you received $25,000 of PPP and you also received $5,000 as an EIDL advance, only $20,000 of the PPP will be forgivable. The remaining $5,000 technically would be repayable, but the client can use your advance, so it would offset that. A little confusing, but it's important for you to understand that so that when you do your forgiveness calculation, you're not double counting that money. So in terms of rehiring employees, the SBA issued further guidance that, you know, they're aware of the fact that people are trying to rehire their employees because they've received PPP funds and are kind of ready to go again. But the employees have declined to come back to work because they're actually receiving more through unemployment and PUA. The SBA is making allowances for this in terms of the amount of loan forgiveness. So if you have an employee that is refusing to come back and you have documentation to that effect, you've made a job offer, a good faith job offer in writing, you have their decline in writing, then that employee can be kind of taken out of the loan forgiveness calculation. It won't prejudice your loan forgiveness calculation. You should advise that employee, that former employee, that they could lose benefits if they decline a good faith job offer. And this has been documented on the Treasury guidelines. So there's a link at the end if you do need kind of this specific wording. It's important to highlight that you don't have to rehire the same employees that you had at the time of, you know, the beginning of the stay-at-home orders and the beginning of, I think the official date is February 15th, actually, I think, for some of these calculations. So it doesn't have to be the same person, but you do need to try and keep your FTE, your full-time equivalent employees, at the same level. And again, if an employee's hours have been reduced, then they may be entitled to claim unemployment and PUA as a supplement to that. Terri, is there anything else that you want to say to this? This is where it starts to get a little more confusing, and I think we'll have some questions.
I think that's good. When we go through the application for loan forgiveness, we can talk about the exact periods that they're going to test those FTEs for.
Yeah, okay. All right, so let's jump into some of the conditions. These were pretty well known at the beginning of the PPP process. So in order to receive 100% loan forgiveness, you need to spend at least 75% of the loan funds on payroll costs within this 8-week window that began on the date of the deposit of loan funds into your bank account. There is a slight adjustment that can be made for payroll periods, and we'll talk about that in a little while. If your payroll period doesn't coincide exactly with the date of deposit of the loan funds, then that can be taken into account and adjusted. It's important to note that sole proprietors, self-employed contractors cannot pay themselves more than they had stated on the original application. So you can't just kind of give yourself an automatic pay raise and use more of the 75% to pay what would have been your ordinary wage that you kind of declared at the time of application. The remaining 25% of loan funds can be spent on eligible business rent, business mortgage interest, and business utilities. And it's important to note that your payroll cannot decrease in total by more than 25%. Or it must be restored by the end of June. Otherwise, the amount of loan forgiveness that you'll be eligible for will also be simultaneously kind of brought down to match whatever that decrease is. And similarly, the average weekly FTE cannot be less than the reference period if you want to keep that loan forgiveness at the same rate. Any loan amounts that do not qualify for loan forgiveness will then transform into the loan itself. That is a 2-year loan at a 1% interest rate, and the first repayment comes due 6 months after the receipt of loan funds. So it's important, again, to reiterate, you have to go and submit your loan forgiveness documentation to your bank, and we'll talk more about what that will look like. It's probably likely to be an electronic submission into the bank, but you will be able to download paper copies of that documentation so that you can kind of, get prepped and get your backup needed as well. So just going to go into a different screen because what I can bring up is the actual form and the guidance, and we can just kind of quickly go through that a little bit as well. So let me figure out how to do this. Give me 1 second. I'm going to do that. We'll try sharing. Yeah, this is where I may not be able to do this. Hang on. Okay, give me a second, people. All right, let's try and do this. I'm concerned because I have it saved as the Google Doc, and that's what I'm using for this right now. So. I don't know that I'm going to be able to share this, which is a bit of a problem. So, Terri, I'm wondering if you can maybe start to talk through it while I try and find the image of it. Would that work?
Do you want to, I can talk through it? Well, if you want to share my screen, I think I can bring it up.
Ah, brilliant. Okay, so let me come out of this. All right, so you should be able to do that now.
Okay, so it's on my screen.
Okay, do you hit share screen at the bottom, green?
Let's see.
There we go, brilliant. Okay, so hopefully everybody can see that. Okay, over to you, Terri, you can drive.
Okay, all right, so if we start here at the top, you're gonna see it's fairly straightforward. You're gonna need your business legal name, address, phone number, the SBA PPP loan number, lender loan number, the employees at the time of the loan application. So you put that on your application. You should use the same number. And the employees at the time of the forgiveness application. The disbursement date, that's the start date of your 8 weeks. And your EIDL advance amount, that's the $1,000 per employee that you may have received, and that they will take that out. It will, you don't have to really worry about that reducing your forgiveness. As you work through this application, that will fall into place. You don't have to do anything separate. The EIDL application number, because they're gonna check. They're just gonna source those. And then your payroll schedule. So the payroll schedule is down another page, but it's basically, are you weekly? Are you bi-weekly? Are you monthly, annually? If you are bi-weekly or more frequent, this is an important part. They realize that maybe your pay periods aren't going to fit. You're not going to be able to fit 56 days of wages into your pay periods without going to Paychecks or whomever and asking them to change it, which is a logistical nightmare if everyone is going to do that, for anyone individually and for everyone together. So what they've done is they've said that you can use this alternative payroll covered period. And you can start your payroll, your 8 weeks of payroll, on the first pay period that starts after you get your funds. And if then you come through and you get to the end of 8 weeks, but because you started a little late, you're not then able to pay that within the 8 weeks, you have a couple extra days to pay that. But they still intend for you to use 8 weeks. They've just allowed you to use your existing pay periods to fit into that alternative covered period. You still need to use the regular covered period for everything else. And it tells you, it will say, okay, for this calculation, use the alternative payroll covered period or the covered period, and you're going to then use the alternative or the covered if you didn't change. Otherwise, you need to just use the same covered period, which starts the clock ticking. So that would be for your 25% expenses, your rent, your mortgage interest, and utilities. That will start clicking the day that the money drops into your account. I don't think we don't need to talk about this one. Okay, so you're going to enter your total eligible payroll costs incurred or paid during the covered period or the alternative covered period. Okay, does everybody know what those costs are? Those are your gross wages that you pay to your employees. That's the employer's portion of health insurance, not the part that you deducted from your employees' checks, but the employer's portion. If you have a retirement, a 401k, and the employer made a match during the covered period, you may include that. You may also include state payroll taxes, which are unemployment and SDI, that you paid on behalf of the payroll during that covered or alternative covered period. Those are your payroll costs. Then you're going to enter your business mortgage interest payments, your rent or lease payments, and your utility payments. Okay. This is intended to be for the 8-week period. Okay. And I guess, should I just drop out a little bit here and talk about what we're going to need to substantiate this?
Yeah, definitely.
Okay. So for all of these, what banks have suggested is that you open a separate bank account so that you have a bank account into which the money dropped and from which you pay everything. It will make it much easier for them to substantiate that what your payroll costs are, particularly if you have an EIDL loan, because you cannot use them for the same costs. And they want to make sure that you did not use any of this 25% for anything other than business rent or lease, utility payments, or mortgage interest payments, because they've stated in there that that's a fraudulent offense if you do that, if you spend any of this. So you can't decide, I'm going to take the loan and I'm not going to use it all for these particular 4 things: payroll, mortgage interest, rent, or utilities, and then I'm going to pay it back. That's not allowed. It's not okay. It has to be just for these particular stated expenses. So you want to make sure that if you do it correctly, which everyone's going to do, you have an easy way of showing that. So a separate bank account is great. It's wonderful. They are also asking for invoices and canceled checks. Yeah. If I were doing this, I would put all this together on an Excel spreadsheet and put all the backup together and mark it so that it makes it very, very easy for your lender to look and go through your application and verify that you have used the monies appropriately. Questions at this point? Nicki,
Well, no, I think that's fine. And we're definitely going to get into some of the detail on that.
Okay. Okay, and then we need to come down through here. It reiterates your eligible payroll costs and your non-payroll costs. And this, we're going to skip back down from the application to the instructions for Schedule A, and then to the backup from Schedule A, because that's how you're going to need to fill this out, is by working backwards. So what you're going to be able to do is list all of your employees who worked during this period and their cash compensation, each individual's cash compensation for the 8 weeks, and their average FTE. The average FTE, if they worked 40 hours, it's 1. It can't be more than 1. So if they work 30 hours, it's 30 divided by 40. If they worked, which is 75.75. If they worked 50, if they work 20 hours, then it's going to be 0.5. Here you're going to enter any hourly wage reduction that they had in excess of 25%. Down here, you're going to do exactly the same thing, but this is for people who received over $100,000. So their cash compensation is going to be capped at $100,000 that you're going to calculate. And these numbers, box 1, box 2, box 3, and box 4, are going to come back up, and they're going to fall into this Schedule A. And if you just work through it, it's pretty straightforward. The other thing is that you need to document your FTEs, which we're doing up there. And the reference period is at your discretion, February 15th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th. Your FTE needs to stay the same. If it drops below, then it's a reduction in FTE, and it then proportionally will reduce the amount that you forgiveness on your loan.
Unless you can show that it was an employee that refused to come back.
Right, exactly. And the same is true of the reductions in payroll. However, there are many things that provide you with a safe harbor so that you're not harmed by this. So if between February 3rd and the 26th, you let people go because you couldn't pay them, there was no extra money coming in from the government. You let them go, they went on unemployment or they did whatever. And then by June 30th, you hire them back so that at June 30th, your FTE equals the FTE from your reference period, then you meet safe harbor and you will not be penalized for that reduction in FTE during the periods where you had no ability to pay your employees. The same is true of your wage reductions. If you bring your wage reductions back up by June 30th of 2020, then there is no reduction. You're not going to be harmed by that. If employees do not wish to come back and they refuse to come back and you offer them a written offer and they decline in writing and you cannot hire anyone to replace them, then that will not affect your FTE or your reduction in salary either. So make sure to document all of those things, because I think that the safe harbors are going to be very important to a lot of us.
And I'll just add to that, that this is an area that is definitely being discussed by Congress right now, this whole June 30th cutoff and potentially extending that and extending the 8-week period if you're not in operation again. So we'll touch on that again during the questions. Yeah.
I wouldn't count on that. I would yeah. It's part of the HEROES Act, which I don't think has a likelihood of going very far. If they bring it up in another context, I think it might go somewhere. I think those are the main items to take into consideration when you're working through.
Terri, what happens if somebody's self-employed or a sole proprietor? Do they still fill in the Schedule A, or do they go straight onto the form?
They go straight on. They go straight onto the form. Yeah, they go straight onto the form. The thing that you can see here when you're talking about the forgiveness calculation, this is interesting, is that you'll see that there are three items that may affect your loan reduction. So, and your forgiveness amount is the smallest of each of these three tests of 8, 9, and 10. So the modified total up here this is taking into account your FTEs and your salary reduction wages. So you're going to want to try to keep your FTEs or bring your FTEs back. Same with your salary, because it by itself can reduce significantly the forgiveness of your loan, even if you meet the 75% payroll cost. This number can reduce it below that. So you want to spend at least 75% of the loan on your payroll, but you also equally want to concentrate on making sure that you have all the proper documentation here, and that you try to keep your FTEs up or bring them back, and try to keep your salary or wage per employee up or bring them back, or document anyone who will not come back, in order not to lose loan forgiveness on this particular metric. And then of course it can't be forgiven over the loan amount.
Okay.
Okay.
All right. So this is where it does start to get pretty technical, and you know, we definitely encourage you to take the time to download the form and, you know, slowly work through it and start gathering that documentation. And I will say that, you know, if you need assistance with that, that WEV can help you with that. So I'll give you all our contact information at the end of this, or when we send out our email after this webinar. So Terri, do you want to just stop sharing your screen now, and I can go back to sharing mine? Let's see if this works. And then we can potentially dive into some of the questions. I just want to see if there was anything else on my presentation. You'll need a breather after hearing about that anyway, I should think. Okay, for some reason my screen isn't working. I have a feeling that I was pretty much at the end of the presentation. So what I'm going to do now is go into the chat box.
Yeah, I have a couple other another comment.
Okay, go ahead.
So you can start remitting that application. You don't have to wait till the end of the 8-week period. You can start remitting it if you have everything paid about 7 weeks in, and speak to your lender. They may have you actually fill this application out, or they may have one online, but even if it's online, it's pretty complicated, and I would work through it on paper first before you do that. And then after you submit it, the bank has 60 days to let you know whether or not, or what your forgiveness level is. So remember that they need to reply to you within 60 days. You don't have to wait a really long time.
Okay, I'm just trying to think if there were some other points that came up during that I was thinking about. Can you use the PPP to be applied to rent in advance, or does it have to be only rent for that 8-week period?
It's supposed to be rent for the 8-week period.
Okay. All right. So let's go into some of the questions in chat.
However, You can use the rent for the 8-week period, for further on in the 8-week period, but it may not be taken into account for the forgiveness portion of it. But it's an allowable expenditure. For instance, it's not allowable at all to use that money to pay for a vendor invoice. You may not do that, but you could pay the rent in advance. That's allowable use for the money, but you're still going to have to repay that money.
Okay, and if you decide that you don't want to ask for the forgiveness, or for whatever reason you can't use it all for the allowable amounts for forgiveness, then once it becomes this loan product, you have carte blanche to use it for any business expenses?
No,
or
you do not.
It still has to be payroll.
That is absolutely correct.
And utility related. Okay.
That's absolutely correct. Yeah.
I think that's.
So there is some discussion, just like you were saying, there's just some discussion on that 8-week period may be changing, and they are talking about being able to extend the 8-week period for the use of funds for those allowable expenses, but never for something that's not, that's separate. That's not part of the discussion.
Right. And in theory, the EIDL was supposed to cover those other kinds of expenses.
That's correct. That's correct.
And we'll see if that comes back online. So I'm going to dive into the chat. So Tina, I think we've covered that. Changing terms to 6 months that would be great, but we haven't heard anything to that effect right now. And I know that there's a lot of campaigning that's happening by the restaurant industry to try and extend this 8-week period, but as of now, that's not the case. Can you still get the EIDL in addition to the PPP? Right now, that is closed to new applicants unless you're an agriculture business, a farm, or strict ag. So as far as we know right now, and this could change, the EIDL is not available. Okay, I'm a single member LLC and I didn't put myself on payroll last year. Can I still apply for the PPP?
Yes, you may. You may. That you're single member LLC, so that is a pass-through entity. You're invisible to the IRS. You should be reporting on a Schedule C. So just provide your Schedule C for 2019 and you can apply.
Yeah, and you won't be able to include contractors that you pay. Just know that it will just be for you. And again, if you want to come through WEV to do that, then email me after this and we can put you in touch with a bank that is still accepting PPP applications. Melinda asks, is dental insurance covered under health insurance in terms of payroll costs? And
it is.
Yeah. So that's a yes, dental insurance can be applied. What about self-employed individuals with no employees? How do we fill out this application? That's from Susan. I think, Susan, you were referring to the forgiveness application form, and we covered that. That's just, you put your number in on the face of the application. You don't use that Schedule A or worksheet at the back. That's if you have employees and you need to be breaking things down and showing your FTEs. Lisa asks, I'm a sole proprietor. I work from home. Can I claim a part of my home mortgage interest and utilities? Presumably is the business mortgage interest and utilities for this.
If you took that expense on your Schedule C in prior years, yes.
Yeah, so I think the point to make is you can't just decide now, oh, this is great, I'll be able to use it for my home mortgage. If that isn't something that you have done previously or wasn't something you were doing on your 2019 return. So if you haven't filed 2019, but you've prepared your Schedule C, then you may still be able to do that, but it's not something that you can just decide to do now. Okay, Summer asks, under eligible payroll costs, it says costs paid and incurred. If your period starts on a Monday and you issued checks for the previous check, can that be applied towards forgiveness? Is that clear?
Okay, so there's significant confusion and the AICPA has asked for clarification on this. The intent of the legislation is for it to cover an 8-week period. Incurred or paid is because some people are on accrual and some people are on cash. So you can't do both. And it says right there, you can't count it as accrued and paid both. So you have 8 weeks of that expense. And if you didn't pay, if you didn't pay the last 4 weeks or whatever, you have until the next billing period to pay that.
Okay. I think some of that's one you may want to reach out to us separately on, because this would be very unique to each business. Raina, I think we've answered that question. My office is in my home. I'm a sole proprietor. Can I use the funds for business rent and bills? Again, you need to be showing that on your tax return, already showing it on your tax return. So it's not something that you can start from this PPP period unless you haven't filed your 2019. Again, Summer, I think we've asked that. And as an S Corp, the owner salary is low and they take distributions which come through in a K1 on tax returns. Can an owner be paid in line with payroll and distributions or just payroll costs?
This is harsh, a little bit harsh. So yes, only the W-2 income.
Okay. I've got a question from Kelly that may veer more into HR than PPP. So Kelly, you may want to, again, I might be able to put you in touch with somebody that specializes in HR. But if you have an employee that has not been practicing social distancing as evidenced by their social media postings, and you have immune challenged employees, can you require them to stay in quarantine for 14 days before coming back? I actually am going to defer answering that because I feel like that's HR specific. Terri, do you have any factual evidence that we can give?
I don't have any factual evidence.
Okay, so Kelly, circle back.
So one thing is that you can't open until you comply with state and local guidelines. And the guidelines I know in Ventura County are fairly specific. You could look there.
Yeah. And Kelly will be able to provide you with some information about that afterwards. So please email me. Raina, I work full-time for a company, but my business, 2 employees, including myself, was affected by COVID. Can I still apply for PPP? I think the answer is yes, but want to confirm. Absolutely. Terri, you wouldn't disagree with that?
I disagree.
Yeah, I can't think of why you wouldn't. So as long as you're drawing a wage from your business or drawings. Is there a better definition for utilities, or is it simply electricity, gas, and water? I.e., could I include an alarm system, janitor, offsite storage?
There is a better description. And so I'm going to find it while you go on, and we'll come back to it. It includes telephone for sure.
Okay, so watch this space. We will give you more utility qualifying expenses. So as a sole proprietor with no current employees, I received $1,000 from my EIDL advance. I have considerable overhead. My rent and utilities for my retail store are more than what I paid myself. I paid people as independent, but was planning on getting some on payroll this year. Can I start it now in my PPP application, or did I need to have them on payroll previously? My guess would be that they had to be on payroll previously. You have to be comparing like for like in terms of the period.
What was the question again?
So the question was basically this person had people as independent contractors, but was planning on getting them on payroll. Can she put them on payroll now and include that as a forgivable expense if they weren't on payroll at the time of?
Well, that's just like hiring a new employee.
So that work.
So
they were contractors before.
You only have so much in loan funds. So you're going to be limited in how much you can pay, but there's nothing to say you can't hire a new employee.
Yeah, I guess it depends on how you calculated the payroll for your PPP.
Right.
And what you would then be comparing it to. So that may be one that you want to circle back with us on after this. Summer asks, regarding salary reduction on the forgiveness application, it doesn't mention safe harbor for the salary hourly wage reduction. I only see it under FTE reduction. Terry, do you want to, should we come back to that question? This is where, I mean, literally it just came out at the weekend, so we are also trying to learn it as we go. I'm going to come back to that and go to Karen. I saw online that the EIDL is only for agriculture at the moment. That is correct. What if you have a non-profit and hire a contractor, would like to use towards rent only possibly? So if you're hiring a contractor, you can't, that doesn't come under the payroll. So you can't include that as part of the forgivable amount. Yeah, so unfortunately that wouldn't qualify. Okay, Tina asks, in line with an owner taking a lower salary and dividends, which we cannot take, can we give ourselves raises? I know for the sole proprietor, you cannot show a higher raise, you know, a higher rate of salary than you showed at the time of the PPP application. Terri, do you want to comment on that?
I was looking up the other thing. So what was the question?
In line with an owner taking a lower salary and dividends, which we cannot take, can we give ourselves raises during this period?
The owner who is paid as a W-2 employee and you're calculated as a W-2 employee, then yes, as long as it's reasonable, you could have a raise, you could have a bonus. That there's nothing to prevent that as long as it's reasonable. If you are using your Schedule C and you're using your net income, you may only pay yourself for 8 weeks of that net income, because IRS has said to pay yourself more is gratuitous.
Yeah. Okay. Terri, I'm going to keep going through the questions, and if you can, what I'm going to do is just make a note of the ones that we're not able to answer.
Okay, that's
and then we'll circle back after that. But I do want to, we do have quite a lot that I want to get through. So Karina asks, can you advise on how PPP should be recorded for bookkeeping? Do I need to record contra expense or contra liability?
Okay, she's talking about the accounting for, okay. So this is a really important question. This is a really good question. And there are a couple of ways that you can record this, but it is not, within US GAAP, there is no specific guidance for accounting for a forgivable loan. Right now, the AICPA and the FASB are working to clarify that. The SEC, which governs accounting for large publicly traded companies, has stated that they will not object if you record it as a debt under ACE 470, or if you are reasonably assured, it is probable, it is very likely that you're going to meet all the conditions for forgiveness, you may record it as a grant under International Accounting Standards 20, okay? Now, I think that the safer thing to do is to record it as debt. It's easier and it's safer. We don't have accounting guidance at this point. So if you record it as a grant, you have to recognize that income over a period. So if you recognize it as a grant, you record it, you recognize the income over a period. We do not know specifically how the forgiveness is going to work. As you could see on the loan application, there are 3 separate metrics that come into play. It's not a dollar for dollar recognition. So as you pay an expense, it does not become forgiven. There are other metrics in there. So recording the income as you pay the expenses releasing the income as you pay the expense is not going to be correct. It's more straightforward to record it as debt. So what you would do in that case is but if you record it the other way, it's not wrong, okay? But it's more straightforward and it's easier. It's much easier. So when the money drops into your bank account, you set up a long-term liability, you cut the long-term liability for the amount of the loan. Then you let it sit there. That's all you've done. And if accounting procedures come out that say we're going to use a different method, that's all you've done. It's easy to fix it. You don't have to go undo a whole bunch of stuff. At that point, then you record your expenses as you pay them. This is where it gets tricky, but it's tricky no matter what, because what you're going to have, if you have a separate bank account, then you're going to write the checks out of that bank account. You need to mark those checks. You need to mark on those checks. You need to, in your general ledger, you need to put a description there. This is paid from PPP funds, okay? You need to be able to back that up, because when you go to the lender, you want to be the easy case. You don't want to be the problem child. And so we need to do it correctly, but we need other people to see that we've done it correctly. But that's going to be fine. At the point you get your forgiveness document back from the lender and they say, we've forgiven, 100% or 92%, you write a journal entry according to US GAAP, and you release the amount of the debt that's forgiven, and now that becomes other income. Down in, in your balance sheet, your P&L, you've got your revenue and your sales, your cost of goods sold, and then your G&A expenses, and then you have that other area down below. And in that other area down below, you're going to want to record that other income. And you want to be very clear. And even though we don't like to make a lot of general new GL accounts all the time, you want to be very, very clear that that is the forgiven amount of the PPP loan, because at this point in time, that is not taxable. It's not, and normally under normal circumstances, if a loan is forgiven, that forgiveness is taxable. Right now it's not. Okay, the other problem is if you use those contra accounts, what you're doing is you're taking your expenses off. You're taking your expenses off your P&L, and they are expenses. For accounting purposes, they're expenses. Right now, the government is saying you may not use them as tax deductions, but that's up for conversation as well. So you don't really want to take them off your balance sheet, off your P&L, and put them on as contra accounts on your balance sheet, when then you may have to go and put them back on your balance sheet, or be able to go back and put them on your balance sheet, or for other purposes of presenting your profit and loss as a projection, or to the bank to substantiate some other loan, you're going to have to put them back on your balance sheet. So I think that I prefer using debt accounting than the grant accounting at this point in time. But just understand that if your CPA or your boss or somebody has come to you and asked to use grant accounting, it's certainly not wrong. It's just more complex, more cumbersome, and and I don't know that we meet the criteria for being absolutely sure that the forgiveness is going to occur.
Yeah. Okay. That's that's complicated, but hopefully you extracted the clarity piece out of that, which is to book it as a loan for now until further guidance is available. And I think this is just a classic example of where things are changing, and just to keep it really simple for the moment. And it will evolve over the year. And, I know a lot of you just use your CPAs at the end of the year to prepare your accounts, and don't want to get tangled in the sort of the day-to-day of this. But again, we're here to advise if this is something that you do need further information and guidance on. Okay, I'm going to keep moving through. I currently do not have an opening date. My fear is using my funds, bringing full staff back and having to lay them off again. Should I be concerned about this? Possibly, yes. Unfortunately, this is where the crystal ball, you know, is a little unclear right now. But as of now, the 8-week period stands and is there for you to try and bring staff back on and pay them. And if there are other roles or responsibilities or jobs that they can be doing while they're working for you, then there may be just some pivoting of tasks that's needed. But I know this isn't clear, and that's not the answer that you want to hear. But unfortunately, we have to deal with the reality of the PPP as it stands right now.
Yeah. So yeah, it was intended to allow employers to keep their employees, to keep their buildings open, and for employees to keep their jobs while we shut down for 8 weeks. That was what it was intended for. But that's really not what's come to fruition in this COVID impacted environment. So if you do bring them back, just think about, you know, this is a time to get some deferred maintenance done. This is a time to plan. This is time to get them all excited about how they can help repivot and relaunch, and just be creative and exciting and be all on a team together and use them the best you can.
Yeah. Tina asks, can we use the PPP to basically pay our bookkeeper who was previously an independent contractor, but bring her on as a new hire for this period, and then potentially put it back as a contractor once things are up and running?
That's kind of funky.
Why? Because that's a new hire. So
I think there's no problem with hiring her, but I think there's a problem with putting her back as an independent contractor afterwards.
Okay. That may be some. Do you want to elaborate on that, or do we take it offline afterwards?
Yeah, that's probably offline afterwards.
Okay. I have always taken an owner's draw. I am not on payroll. I did not include my draw on my loan numbers. Not sure if that was an error or not. Can I still use the funds to pay myself?
What kind of an entity are you?
I'm trying to think if she has said, Lisa, can you just tap in what kind of entity you are? And I'll scroll down, and she's an LLC single member. Okay,
so guidance has just come out that you need to get a hold of your lender, because if you did not include yourself in your PPP loan, you can have the amount of the loan increase to cover whatever is on your 2019 Schedule C so that you can pay yourself.
Okay, that's promising. I'm in the process of getting an EIDL loan. I received the advance, but I applied for it on March 25th. I have heard that the SBA is still working through the backlog of EIDL applications while they still have funds. So,
and I totally agree. I've heard 5 or 6 people have gotten actual EIDL loans over the past week that I know.
So yeah, don't give up if you haven't been contacted by them, but you did receive the advance. You may still be able to get an EIDL loan. And just to reiterate, that is a really good loan product. It's not forgivable, but it's a very low interest rate over a long period, which means that your repayments will be low, and the repayment is deferred, I think, for a year. You don't have to make any payments for the first year. So it really is an excellent loan product if you need it and it's offered to you. Okay. Sorry, just going through, I'll send you with the, yeah, so just to reiterate, we will be sending out the recording of this webinar, and I'll attach some links to various, the forgiveness application and other sources of information that could be useful. All right, I haven't started the PPP application yet. When does the 8-week period start? Well, it starts once you get your PPP funds deposited into your bank account. So you can still apply. Again, WEV is working with one of the local banks to facilitate that. So come back through us and we can help get you through that application process. And then as soon as the funds are deposited into your account, that is when your 8-week period starts. Okay. And we've got another accounting question. Should I proceed as normal and record as a liability and forgive it through a journal entry at the end? Yes, that is something that we talked about. You record the entire amount as a loan. The entire amount that you receive as a loan disbursement can be recorded as a liability. And then when you get your official kind of forgiveness sign off from the lender, at that point you can do a journal entry to reverse the either 100% of the loan or, you know, whatever percentage of the loan is forgiven. So hopefully, Karina, that is clear to you now, but again, we'll be happy to circle back with you on that. Just trying to think, we did get some questions beforehand as well. If you are a sole proprietor with more than one entity, can you apply for more than one PPP? Terri, over to you.
I don't know. I think no, I mean, you have more than one Schedule C, you have more than one entity. I'm not sure. You certainly can't get a PPP that includes more than one entity. So it would seem likely it might not go through though.
Okay. And a question, sorry, from Summer, I think this got skipped. Salary, hourly wage reduction, step 1 on the application seems like they are asking for the hourly wage amount, not the amount paid. Summer, I feel like this is going to be hard for us to navigate in this format. So I think if you can connect with me afterwards, and then I'll be able to, we can have a conversation, or I'll connect you directly to Terri. Can we get forgiveness if we do not hit the 75% return of staff and or 75% use of funds?
It's proportional.
And how much forgiveness? So it would be calculated proportionally to what you can use. And would that be apparent on the forgiveness application form? Would you be able to see at that point?
Yeah, you'll see it. When you get to the end of the forgiveness application form, it will show you what you're applying for forgiveness. And it's based on the lesser of the calculations on those 3 metrics.
Okay. Okay, and then another question was, I know that you've advised people to keep a separate bank account, but what if you basically don't want to open another bank account because it involves you having to go into the bank or you can't get there? Would an Excel spreadsheet be sufficient? And I think really the point to emphasize here is, and Terri mentioned this at the beginning, you need to make it as clear as possible for the lender. You just want to have everything very clearly documented with all your backup documentation to support every transaction. And then, you know, your forgiveness application will hopefully pass through quickly. Where things will get stuck is if you're not providing full documentation or sufficient documentation. And that's certainly something that we saw as part of the application process as well. So you definitely take the time to do this correctly. And as Terri suggests, start that process now. Start gathering all the information now and having some order to it so that when you do come to apply for the forgiveness, it just naturally falls out of your process. Okay, so I think we've come to the end of the chat. So if anybody still has questions, please go ahead and enter them into the chat box now. I know that we covered a lot and it is confusing, but we will be, in fact, I'm going to type in my email address just so that people can contact me afterwards if they have questions that either they don't want to bring up in public or they want to just circle back afterwards. Oh, oh yeah. So did we go back to?
Yeah, an alarm is fine. Yeah.
Okay.
Yeah.
So anything kind of building structurally related for the business potentially is utilities. And Irma just reconfirming that no, you don't have to put the money in a separate bank account. It's something that we recommending or suggesting, just because it helps keep things clearer. If you're only using those funds in that bank account for the approved transactions, the payroll, the rent, and the utilities, then it just keeps everything really neat and clear for the bank. Janitorial offsite storage, would they be considered utilities?
No.
Nope. Okay. All right, everybody. I know that we haven't, well, actually, no, I suspect Terri and I may stay on, because I think I advertised that we would be on until 10:45, and we'll consider this kind of an office hour session. So if you do need to go, then feel free, and hopefully we've been of some use to you, but we're going to stay on for a little while longer. We'll see if anybody else pops on, but otherwise, thank you. And next week we will be, I think, going back into the concept of branding and branding during reopening, and really kind of circling back on kind of the objectives of your business in this new era. So stay tuned for that, but thank you for being here for now. I'm going to try and get my presentation back on to make sure that we covered everything. Terri, are you okay to stay on for a little bit longer?
Yeah, sure.
Okay. Okay, there we go. Oh, so yeah, I can leave that up for now. All right, we have one more question that's come in. Can staff still be on partial unemployment if we cannot bring them back full time? I believe that is true.
Yeah. So the staff doesn't, how you pay the staff doesn't affect their wage. So if they qualify for unemployment, then they qualify for unemployment. And for pandemic unemployment, they do qualify if their hours are reduced due to COVID impacted conditions below a certain amount.
So does that make them whole? Or I guess with PUA, that's going to still pop them above.
Going to pop them up.
Yeah, it'll pop them up above what they had. So, but that is through the end of July or mid-July?
End of July.
Yeah, PUA.
Yeah.
Yeah. Okay. If we have excess in the 75% payroll calculation, can that be used in the 25% utility calculation?
If you have what?
Excess of the 75% payroll. Yeah, I mean, I think you can use 90% of it for payroll. It's just
So except for a sole proprietor, you must use at least 75%.
Yeah.
Yeah.
So you could use the whole amount, and then that would qualify.
Yeah.
So regarding reporting for the PPP loan forgiveness, I plan to run a payroll report for money spent and provide copies of credit card transactions for phone, internet, and electricity. Does that sound appropriate?
Yeah. Yeah, if you look at the loan forgiveness form, at the end of the loan forgiveness form, it lists the type of documentation that will be accepted with the form. And what you just stated is there. So I read through, looking quickly to see if I were going to do this. You know, what type of documentation is included for each type of expense, so that I only had to have like one type of documentation that I kept for everything I did. And they are invoices and canceled checks.
Right. Yeah, so maybe if you could download the statement from the, you know, Edison or whoever, you know, that might be.
Yeah, from the bank statement from that one account should be great. And then they are going to want to see invoices to see that the invoices from the prior periods align with the invoices that you paid for the covered 8 weeks and for the period afterwards.
Okay. So something else that I just heard this morning, which could be concerning, is that the banks are selling these loans, these PPP loans, to third parties.
Right.
So how would that impact the loan forgiveness aspect?
All of that means that you need to make sure that you apply, that you put your loan forgiveness package together quickly and very transparently, because you don't know who's going to be reviewing it. Right?
Yeah. Yeah. So this is an interesting one. So, you know, say, you know, you got your PPP through Wells Fargo. Wells Fargo may then decide to sell this loan to another organization. You would receive a communication about that, you know, to inform you of that, but then it, you know, you wouldn't be then seeking the loan forgiveness through Wells Fargo. So it's, I don't know, it's just something to be aware of. It's a little concerning, but if the banks are doing their job properly, then they'll be keeping you apprised of that as well. So just one more thing to be aware of. And again, we kind of concluded the main part of the presentation, but if you do have questions, Terri and I are here just kind of on standby to answer any PPP related questions that you may have. But while you've got us, you may want to ask us about EIDL or other things as well. So I'm happy to take any and all questions relating to COVID funding. So if I'm in excess on 75% wages, I can use that excess toward the, yeah. So Melinda, the point there is, as long as you're not a sole proprietor and you've kind of bumped up your wages, because that is not allowed with the PPP. If you have employees and the proportion that's used for payroll is closer to 80% or 90%, that's fine. As long as the remainder is used on rent, lease, mortgage interest, or business utilities, then all of that would be forgiven. You don't have to just stick at 75%, 25%. All they're saying is that at least 75% should be used for payroll.
Yeah. Remember the question that was asked about the safe harbor for the 25% wage reduction? I don't know if that person is still here, but the answer to that question is, it's kind of hidden. It's under salary and hour wage reduction. It's step 2, determine if a salary hourly wage reduction safe harbor is met. And step C says enter the average annual salary or wages of June 30th, 2020. If 2.C is greater or equal to 2.A, which is the annual salary or hourly wages of February 15, 2020, salary wage reduction safe harbor has been met. Enter 0 in the column above box 3 for that employee.
Can you translate that into English?
Well, what it says is, remember that box on the back page? I mean, where the boxes that you're filling in, and it says salary hourly wage reduction, that you're supposed to put it in for box 3. Well, the instructions for box 3 say, if you brought their wage back up at June 30th of 2020 to what it was at February 15th of 2020, February 15th of, yes, February 15th of 2020, then you put 0 in that wage reduction column. And it says safe harbor has been met.
Yeah, okay, thank you.
Yeah.
And Rachel, yes, just to clarify, you can use 100% of the PPP for payroll. that is allowed. My PPP amount was based on the average payroll of 2019, but we increased payroll slightly in January, so using more than 75% is possible. Yes. June, we never receive invoices from our landlord. We have a recurring payment that has gone on for years. Should we ask our landlord to send us an invoice, or is our payment history enough?
Yes. You should ask.
You should ask, yeah. Document it. Again, just for the sake of you know, wanting to get your forgiveness application through quickly and simply, have some written proof of what that amount is. Should I speak with someone at WEV regarding the best loan for me? After attending multiple webinars, it looked like EIDL was the best, but the guidelines were revised. I have considerable overhead and need much more assistance. I inquired about the PPP with my bank. Yeah, and so Shale, yes, in a word, we can help you navigate the choice between EIDL and PPP, but unfortunately the EIDL is closed to new applications, although you say you did get the grant. So hopefully you're still in the queue for an application for that. And I don't know, it's probably worth calling the SBA EIDL assistance line just to see if you are in the queue, that they are going to be coming back to you to offer a loan. But please, you know, get in touch with us and we can try and assist you with what is still available and what will make sense for you based on your business. Okay, so another question from Tina about employees. If I'm understanding you, we can give an employee a bonus for working more at this time instead of a raise, so that we don't have to take away later because we wouldn't be able to afford it. So can we pay bonuses to FTEs?
Yeah, you have to document that the bonus was earned during the 8-week period. You can't pay a bonus that was earned cumulatively over a longer period of time. So you could pay them an extra $2 an hour as a hazard pay, something like that. But you have to be able to document the reason for the bonus, and the bonus was earned during the 8-week period.
Okay, great, thank you. Okay, so again, just to say, if you have questions, plug them into the chat box. Another clarification question from Summer. Thanks for answering the safe harbor question. It appears salary, hourly wage reduction, step 1 on the application seems like they are asking for the hourly wage amount, i.e. $25 an hour. On step 2C, is it asking for the hourly wage?
Where on the application again?
I don't know. Summer, do you want to type in? In fact, you know, I am going to unmute you. What a genius idea. And we will get this answered. All right, Summer, you're up.
Thank you. So my question is, under the salary hourly wage reduction, I had always assumed that, like, if you paid the employee, let's say $3,000 during the previous period, you had to pay them 75% of that or more of that same $3,000. But the way the application seems to be worded, the forgiveness application, is if you paid them like $25 an hour to get to that $3,000, they want to confirm that you're still at the $25 per hour.
Correct.
Is
Correct.
It
so
paid, or is it the hourly wage?
Because no. So yeah. So when when you apply for the loan, you're applying for 8 weeks of payroll, which could be 2 months, right? Vary by a couple of days if you pay semi-monthly or monthly. You're applying for 8 weeks of payroll plus another piece. to keep that physical building open so the employees can come back. Okay, that extra piece is that 25% of the loan. The 8 weeks is the 75% of the loan. So you need to keep your employees at their same wage level that they were before during that 8-week period, or bring them back, right? By June 30th.
Okay.
Okay. Whether it's hourly or salary, if it's salary, you're going to divide it by by 40 hours, by 40 hours a week, and get a dollar amount if you need that dollar amount.
Okay. So it's based on the amount of the actual pay, because it makes it sound like the hourly wage. So it makes it sound like if they were making $25 an hour.
That's what I thought when I first read through it, but it's the amount. It's the amount of the actual wage for that 8-week period.
Okay. That's what I would assume. It just doesn't seem like it's worded that way.
Yeah, I know. There is a lot of ambiguous language throughout the whole thing. And that's why there are a lot of requests for clarification. And sometimes you have to look back at the original legislation to see what it allowed, to see what the language, ought to mean.
Okay.
All right. Summer, is that answer your questions? Okay, great. Tina, I'm going to unmute you, and you can also ask your question. Why can't I unmute you? Maybe you're unmuted already. Maybe I need to go into participants. 1 second. Hang on a sec. Merge with audio. Let's try that. No. Okay, I'll try and keep working on that. In the meantime, Tina says, I was paying staff minimum since we reopened the takeout food, March 22nd until now. We now have the PPP. Can I pay them a bonus to cover that extra money to add to what they should have made? Evidenced by past payrolls. For instance, a cook made $20 an hour, but since takeouts, we could only afford $13 an hour.
Well, you actually know, you can't as part of the 75% because it's not part of the 8 weeks. So the 8 weeks has to be, it has to be earned in the 8 weeks.
Yeah.
Okay, you're unmuted now, so I can.
Okay, so since I got the PPP, which was April 24th, you're saying that I can.
You got it April 24th. So as of April 24th, on April 24th, you can pay them extra. You can pay them extra starting on April 24th.
As a bonus.
As a bonus.
Or do I? Okay. Okay, got it.
Right? You have to document that they did something, they earned something starting on April 24th.
I have evidence on payroll.
Yeah.
Okay, perfect.
Any more, Tina, while you're
Well,
audio?
If say somebody came in and they worked, because some of them came in and worked for me, they didn't clock in at the time, but we have it on paper. Like I have everything paper. Is that enough evidence?
They're going to look at what you paid them. They're going to look at the payroll reports. They're looking at the third-party payroll reports, the checks that are written, and the tax forms. So I would say yes. And I would put a note. I would put a note, forgot to clock in, and have it initialed on the paperwork.
Okay, that they didn't clock in, but we're still paying them because I have a form where they clocked in manually.
Yeah,
but it didn't go on payroll. Okay.
Yeah, just keep that documentation. Probably no one will ask for it, but the documentation they ask for a set of documentation to be submitted, and they ask for a set of documentation to be prepared and maintained but not submitted. Both those sets of documentation you need to keep for 6 months after the forgiveness calculation comes back from the debtor, from the lender.
Got it. Okay, great. Thank you.
Yeah.
Great.
Anything
All
else?
right, thanks, Tina. And Shale, just as a sole proprietor referring to Schedule C when applying, would I be using my net profit as my wage?
Yes.
Yes,
Yes.
exactly. Exactly. Okay. Again, if you have any more questions, please type them into the chat box. I'm going to make an executive decision and say that we're going to wrap up in a few minutes because I feel like, I love it when you, last call for orders. Will the EIDL be deducted from the loan from PPP forgiveness?
The advance.
The advance. So if you've received your any amount between $1,000 and $10,000, that does need to come out of the PPP forgiveness. And I will just flip back up to this example, Gina, which helps explain how you calculate it, even if used for other purposes. Unfortunately, so. And I can't. Yeah. All right, anybody else with final EIDL PPP related questions? Can it then be treated as a loan? Yes, exactly.
Yeah, so what it does is if you've recorded it as a loan already, if you've recorded the PPP as a loan already, then the remaining loan will include, the forgiveness will be reduced by the EIDL advance. The EIDL advance is still going to sit there as income. It's not going to go away because you're not going to take COD income or grant income on the portion of on the PPP.
And presumably the EIDL advance follows the same rules of the PPP and it's non-taxable other income.
We don't know that.
Okay.
We certainly hope so. I looked all last night to find that out.
All right, I'm just going to scoot back up through here. This may prompt you to ask questions, so we'll just whiz through these slides about eligibility for application. It's still open if you still are interested in applying or know somebody that is. Have them contact WEV. Documents that are needed for applying. Again, this is all standard. If there's any confusion with unemployment insurance and PUA, the point to make there is that you can't double dip. So you can't take out PPP and also claim unemployment if you're a sole proprietor. And if you need help figuring out which is the best option for you, then we're happy to help with that. We've spoken about the advance. We've also spoken extensively about rehiring employees. If a former employee declines to come back, as long as that is all documented and you have evidence of that, then they can, the element of their wage and salary can be taken off of the forgiveness calculations. And you haven't been able to rehire anybody. So you don't have to rehire the same employees that you let go. But just to know that your employees may still be entitled to unemployment insurance PUA if their hours have been cut as a result of COVID. And then the loan forgiveness conditions, again, we've got the 8-week window that started on the date of deposit of the loan funds into your account. Lots of rumors swirling around that this may change, but nothing as yet. And Terri is not confident that that will happen. So we will stick to just assuming the 8 weeks begin on the deposit of loan funds. There can be some adjustments made to match payroll cycles. That's all set out on the forgiveness application and the forgiveness guidelines. It's an 11-page document that is online that you can download and start really familiarizing yourself with. As long as at least 75% or more of loan funds are spent on payroll and the remaining balance is spent on business rent, mortgage interest, or utilities, then that entire loan amount, PPP amount, will be forgiven, so long as you can provide all the evidence to document that. Any amounts that aren't forgiven, oh, that's clever. Who scribbled on me? Is that you, Terri? Any amounts that aren't
It
forgiven,
wasn't me.
it turns into a 2-year loan term. From the beginning, from the date that the funds were deposited in your account, the 2-year clock starts there. You don't have repayments for the first 6 months, and it's a 1% interest rate. And again, you can go online to the SBA website and the PPP pages and find that application for forgiveness now and spend the time getting familiar with it. You will need to request loan forgiveness from your lender. It is not just automatically given. So please be aware of that. And your lender may not be the same lender that you got the PPP through in the first place if they have sold your loan on the secondary market. So that was everything in a 2-minute recap. I don't think we have any more questions. Stop that sharing. The chat box is empty. I think we can call it a day. So Terri, thank you very much for being our in-house expert. Really appreciate actually everything over the last 8 weeks. Terri has just been utterly invaluable for WEV in the guidance that we've given our clients. So thank you. And thanks everybody for tuning in, and we'll see you all next week. Okay, have a good rest of your day.